All right, let's talk about Simon Property Group, or SPG. They just dropped a Q3 earnings report that was a serious beat, and yeah, the stock definitely noticed. So in this breakdown, we're going to dig into the numbers, unpack the strategy behind them, and then I'll give you our take with a forward-looking rating. So what's the big story here? Well, it's a decisive beat. I mean, Simon didn't just squeak by expectations, they absolutely blew past them. We're talking across pretty much every key metric that matters. And here's the number that really got everyone's attention. A 4.2% beat on funds from operations, that's FFO, per share. Now, if you follow REITs, you know FFO is the number. It's their core profitability metric. So a beat this big, yeah, that's a huge signal that there's some serious strength under the hood here.
Okay, so here's how we're going to tackle this. First, we'll stick with that headline beat. Then we'll peek inside the numbers to see what's really driving the growth. After that, we'll get into their strategic blueprint, and we'll wrap it all up with our official rating in a segment we call The Next Call. Just look at these numbers. The strength is pretty much everywhere you look. FFO per share came in at $3.22, nicely ahead of the $3.09 consensus. Revenue? Another beat. And check out the operational metrics. Occupancy is up, and net operating income grew by a solid 5.2%. But you know what really speaks volumes? That 4.8% dividend hike. That's management basically shouting that they are very, very confident about cash flow going forward. All right, so when you see a clean sweep like that, the next logical question is, why? What's actually powering this performance? Let's get into the nitty-gritty and look inside the numbers. You know, sometimes the best clues come straight from the top. The CEO, David Simon, had this great quote on the call. He said the team is juiced, energized. That's not your typical corporate speak, right? It tells you there's a real conviction inside the company that this momentum isn't just a one-off thing. They see it continuing right into 2026. And that confidence isn't just talk. The mechanics behind it are pretty clear. First off, leasing velocity is just on fire. Over 1,000 leases signed in Q3 alone. And what's really interesting is that 30% of that activity came from brand new tenants. So not only are they keeping tenants, they're attracting new ones. All of this is happening while base rents are climbing. And it's all backed up by this absolute fortress of a balance sheet. We're talking about almost $9.5 billion in liquidity. That's a powerful combination. Okay, so this right here is maybe the most crucial point. Management is literally putting their money where their mouth is. They've raised their full-year FFO guidance again. And get this is the second quarter in a row they've done it. For an analyst, that's one of the strongest bullish signals a management team can possibly send. It screams confidence. So, the current performance is looking great, no doubt about it. But what's really interesting is what Simon's doing for the long game. They're making two pretty significant moves right now to sharpen their portfolio and really set themselves up for the future. You can really think of their strategy as this two-pronged attack for creating value. On one side, they're doubling down, consolidating control over their absolute best, top-tier assets. And on the other side, they're innovating, really pushing the envelope on what a retail destination can even be. Okay, so pillar number one, taking full ownership of Taubman Realty Group, or TRG. They just bought up that last 12% stake. Why does this matter? Well, it means Simon now has 100% control over this incredible portfolio of super high-end luxury malls. It simplifies everything, it's expected to add to FFO next year, and here's the kicker. Management thinks they can squeeze out enough synergies to push the return on this deal, the cap rate, up towards a very, very attractive 8%. Now for pillar number two, and this is where they're looking to the future. They announced a brand new project called Sagefield down in Nashville. And let me tell you, this is not just another mall. We're talking a massive 100-acre mixed-use luxury destination. The buzzword they're using is experiential placemaking, which basically means creating a place people want to be, not just shop. Think high-end retail, great dining, a luxury hotel, the whole package. It's a huge strategic leap beyond their traditional mall business. Okay, so we've looked at the quarter, we've looked at the long-term strategy. That brings us to our final segment, the next call. This is where we put it all together and give you our take on what's next for SPG. So, after a quarter like this, it all boils down to one simple question, right? The one every investor is asking. What's next? Where does Simon Property Group go from here? Let's play this out. What's the bull case? It's pretty straightforward. That strong leasing momentum just keeps on rolling. They get those TRG synergies faster than anyone expects, and they execute flawlessly on the big Sagefield project. On the flip side, what are the risks?
Well, the bear case is mostly about the big picture, the macro stuff. A broad economic slowdown could hit consumer spending. Higher interest rates could put pressure on all REITs, not just Simon. And of course, a huge project like Sagefield always has some level of execution risk. So here's our call. We think Simon's operational strength combined with these smart strategic moves gives them a really clear runway to outperform the rest of the REIT sector. You can track that with the XLRE. In our view, the positive things happening specifically at Simon are just too strong to ignore, even with the macro worries out there. When you add it all up, the strong fundamentals, the smart, creative moves, and a management team that is clearly firing on all cylinders, our official rating on Simon Property Group is outperform. And just as a reminder, a quick but important one, this is all for informational purposes. This is not financial advice. So we'll leave you with this to think about. Simon has laid out a really compelling case, right? Both with its performance today and its vision for tomorrow. The big question now is, can they keep using that huge scale and smart strategy to do more than just survive the macro headwinds? Can they actually redefine what physical retail looks like for years to come?